Welcome to the VITV podcast. My name is Becco, and I have a special guest today, Jason Krom. Thanks for joining the podcast once again.
Yeah, thank you, Becco. Thanks for having me again.
Yeah, Jason is, if you guys haven't listened to the previous episode, Jason is CFO of HOFV, Hall of Fame Resort and Entertainment Company. You guys should definitely check that out before you listen to this one, because we talked in detail about his personal story of how he became the CEO of this company, and all of the kind of the journeys he went through in terms of his personal journey, but also from the company standpoint, what he went through last year with COVID and the SPAC and everything else in between. So definitely check that out before listening to this one. But really great to have you again, Jason. How are you?
Yeah, doing well. Yeah, thank you very much. And again, great to be back on and be able to tell more of the story about the Hall of Fame Resort and Entertainment Company.
Yeah, people are excited to be listening to the podcast. Just from what I see on the messaging board. So really excited to have you on again. So I thought,
good.
So I thought, in this episode, I thought we'd go more in detail into the company's financials and sort of dig into company strategy and the future. So right off the bat, could you just quickly rehash for us what the company does?
Absolutely. Yeah. Again, Hall of Fame Resort and Entertainment Company. We're a resort and entertainment company that really leverages and is built around the power and the popularity of professional football. In terms of the specifics, I'm sure we'll get more into this throughout our conversation today. We really operate across three verticals. The first being destination-based assets, second being media, and the third being gaming. And as you mentioned, Becco, relatively new as a publicly traded company. So we completed a merger with Gordon Pointe Acquisition Corp in July of 2020 to become publicly traded on the NASDAQ under ticker symbol HOFV.
Yeah, it's a really interesting setup because obviously football, if you guys are listening internationally, American football, obviously the biggest sport in this country. And it's really interesting to see how your company has positioned yourself, obviously, sort of on the, obviously like the Hall of Fame Museum, everything else in between. I think that speaks for kind of the power of the brand, which we'll talk about in a bit. But yeah, so great. So the next question I have for you is, in terms of the strategy, so where do you go from here? When I read your 10K, it outlines sort of the three-phase strategy and three different sort of verticals, right? You have the destination-based assets, you have the media company, and then you have the gaming, and then you have the three different stages. Phase one completed, and then phase two started last year. And let me just quickly look at my notes. Phase two started in 2020, $300 million in capital spending. Expect to be complete and operational by 2023. So, so give us a little bit more detail on your strategy overall, this three-phase strategy that you outline in your 10K.
Yeah, no, absolutely. So in terms of the first phase, like you mentioned, that's completed. We have assets in the ground, including the Tom Benson Hall of Fame Stadium, our youth fields and sports complex in Canton, Ohio, as well as standing up our media vertical. Then when you talk about phase two, as you mentioned, we're in process with completing that. We already have our first asset completed as part of phase two. It's already generating revenue in our DoubleTree Hotel that we built in downtown Canton, Ohio. In terms of how that progresses, we'll continue to build out those assets, looking to have those completed, as you mentioned, by 2023. And then phase three, very much in the planning process, but given the access to land that we have in Canton, Ohio, some of what I would call our competitive advantage across the three different verticals that I'm sure we'll talk a bit about, that really positions us well to continue our phases of growth here into the future. And as you mentioned, Becco, the three verticals. I love talking about those because that's really what I call a big unlock for us as an organization, because they really work together. They work in tandem. We equate it to the three legs of a stool. First being the destination-based assets that we have. we're building assets around the Pro Football Hall of Fame, in addition to those existing assets that I mentioned, stadium, youth fields and sports complex. Some of the new assets we're building at the Hall of Fame Village, powered by Johnson Controls here in Canton, are intended to be building for offices, meetings, and speaking engagements. Yeah, it's going to be called the Constellation Center for Excellence. We've broken ground on that in September of 2020, so that continues to progress for us. We'll have a retail promenade. We'll also make improvements to the sports complex and the stadium. We'll build an indoor water park, a center for performance, which you could think about as like a convention center or a field house. We'll have green space on campus, which we're going to call Play Action Plaza, and 2 hotels. I mentioned, one of those is up and operational a few minutes from our Hall of Fame Village, powered by Johnson Controls campus, right in downtown Canton, Ohio. That's branded as DoubleTree by Hilton, and we'll add another hotel right on campus throughout phase 2. So that's the first in terms of destination-based assets. Our media vertical being the second. We've done a lot of work here, signed a lot of agreements, in this space since we've gone public. That includes with organizations like Sports Illustrated Studios and 101 Studios to produce a documentary around the NFL Alumni Academy. We've signed something with Elite Holdings, through which we'll be working on media with them around the 10 individuals that have both won the Heisman Trophy and then been enshrined into the Pro Football Hall of Fame. So really excited to be able to tell that story. And also with an organization called Tupelo Honey, where we'll work with them to produce a show called Inspired, which will tell the stories of those around the sport of football that are really using their platform to make a positive difference within their communities. And this vertical is also where we'll put NFTs or non-fungible tokens, which I know I'm sure we'll chat more about. But we've made some recent announcements there, and we're excited to get into the NFT space and really work with some good partners there to produce some really, really cool content.
Mm-hmm. And you want to mention anything about the
third?
Yeah, sorry, go ahead.
Yeah. And then our third piece just being around gaming and the gaming vertical. So I'd sort of split it into 2 different areas. First of which being our Hall of Fantasy League. So looking back even to March 30th, we made the announcement around our 10 team names, their logos. We opened up the staking and the merchandise store for the Hall of Fantasy League. And everybody can find more information on that at thehofl.com. And we're really happy with the initial response that we had. We had to actually increase the stake limits a few times on 3 of our teams since they went right up to the limit there on that first day. So really, happy about that. And then some of the next steps we have, we need to then announce our front office structures for each of the teams and then hold our initial draft this summer before the league goes live, which will correspond with the kickoff of the 2021 NFL season. And then the other piece of the gaming vertical is around sports betting. So that's not yet legalized in Ohio, but it's obviously something we're keeping our eye on. And we'll hopefully have more to communicate on that front as the sports betting here in Ohio continues to develop. Mm-hmm. So as I think about the 3 legs of the stool, Becco, again, I really like all the synergies that we could potentially have, and that's a big unlock for us as an organization. I mean, as a quick example, you think of something like the Hall of Fantasy League. You could do live events at our stadium, taking advantage of the assets. You could do a lot of media content around that, and that's 2 of the 3 verticals. And as a business, the Hall of Fantasy League sits in the third as gaming. So as we think about going into new and different things, it's always through the vein of, well, what's the synergy, and how can this particular business help out our other 2 parts of the overall Hall of Fame Resort and Entertainment Company.
That makes a lot of sense. So like the 3 different verticals, destination-based assets, media company, and the gaming company, it really sort of works in tandem with each other. Like you said, if I am super into football, I go there to see all the destination-based assets, all the stadiums and the actual games and whatnot. And then I can consume, after the fact, all the kind of exclusive content and programmings that you generate under the media umbrella. And then if I want to actually engage more directly by playing fantasy or betting, you could do that as well. So it really sort of just increases the lifetime value of a particular customer. It sounds
Yeah.
like.
Yep, that's right. Yeah.
Yeah, that's great. And then the three-phase approach that you outlined, just to recap really quick on that point, Jason. So the first, obviously finished, invested $250 million, Hall of Fame Stadium, the media group, the youth football sports complex, all sort of built out. Phase two started last year, and then phase two really around building out new hospitality attractions, corporate assets. You mentioned a few of those, like Center of Performance.
Center for Excellence, retail.
That's right. And then in phase three, the immersive VR, AR attraction, sort of thinking about the future, what that would look like with AR, VR, and hotel with housing assets. So that makes a lot of sense. Great. I think this is actually a nice segue into one of the questions that we ask always in this podcast, which is competitive advantage, right? The moat, the classic moat question.
Yeah.
And so we sort of talked about some of that in the previous question, but I'll just pose this question to you. What do you think is the biggest competitive advantage that your company possesses versus others?
Yeah, I mean, Becco, I'd say, our brand, our partnerships, those are really at the core of what we see, our competitive advantage being. The content we're able to produce, the brand partnerships we have access to are really something that gets us excited in terms of what we're doing on a day-to-day basis and the company that we're building. And I think it all really kind of comes together through the synergy that we talked about through each of those three verticals. So I'd say that's probably the biggest competitive advantage that we have, where we're able to, and we'll look to do this within the NFT space too, utilize the content and the brand partnerships to really look to bring those things to life in a way that no other company can.
Mm-hmm. Yeah, that makes a lot of sense. Like the overarching sort of the theme, right, is just football, and on a tactical level, you guys have very long term partnership with the Hall of Fame Museum and sort of the brand around that. So it makes a lot of sense from that standpoint. Anything else you want to mention about competitive advantage? We usually just go through a list. So you talk about brand, network effects, switching cost, low cost, intangible assets. But really, I think you're honing in on the brand and some of the intangible assets around the brand, really.
Yep, exactly. I mean, that's kind of how we're building the organization, building our verticals is around, like I said, the power of professional football, leveraging that, the popularity of it, and then around that, direct access that we have to exclusive content and those strong brand partnerships. Again, across, the Pro Football Hall of Fame, we've signed partnerships with the NFL Alumni Association as they're doing their NFL Alumni Academy right in Canton, Ohio, which again, you see across the different assets. That specific academy takes place at our stadium. The folks participating can stay in our hotel. We're producing media off of that. So it's really, again, a very synergistic story when we think about, new business, and it's all sort of powered by that brand and brand structure that we're putting together as a company.
That makes a lot of sense. Great. Let's now move on to the income statement. Sort of dig into kind of the details here. So
sure, yeah.
When I look at your 10K, a lot of companies have suffered tremendously from COVID on a top line standpoint. But from your standpoint, bulk of the revenue right now, at least right now, comes from the sponsorship. So not a lot of hit there on the top line. Obviously, like rent and events and hotel took a little bit of hit, but in terms of the percentage, not that much. Just wanted to point that out. And then, sort of thinking about the future, right? Because you guys are startups, and really the power here is the growth in the future of this. That's the essence of a startup. So, kind of walk us through, as phase two is sort of ramping up, and you mentioned that already some of the revenue is coming online with hotel and things like that. So walk us through when you expect phase two really start to kick in, and if you want to add any more comments about COVID and the impact around that. Yeah.
Yeah, no, absolutely. So, as you think about our revenue and our top line, we're expecting revenue to grow in 2021 versus 2020, and there's a few catalysts for that. First, you had mentioned, Becca, we opened our DoubleTree Hotel in Q4 of 2020. So looking forward to having that online throughout the full year of 2021, which will bring some growth to that. Also, we'd expect to begin getting some revenue from the Constellation Center for Excellence towards the end of this year as that asset gets completed on the actual Hall of Fame Village powered by Johnson Controls campus. Also expecting incremental events at the Tom Benson Hall of Fame Stadium, the sports complex, as well as the DoubleTree. And again, we're going to have to work very, very closely with local state regulations. So that's going to depend on the continued progress with COVID vaccinations, but we're targeting a lot closer to our capacity to be able to fill the stadium, et cetera, towards the end of this year. We expect to see media revenue coming in later this year. In terms of NFTs, one of the big things about the NFTs is it doesn't take a long time to get something onto the marketplace. So that's something we're obviously looking at, and then the other media pieces that we've been working on, we expect to begin monetizing later this year. And then you mentioned the Hall of Fantasy League. We talked about that a bit before, so we're expecting to generate some revenue from the HOFL later this year. Again, as the first season kicks off, correspondingly with the NFL season kicking off for 2021. Mm-hmm. So we'll continue then on the phase 2 assets to bring them online throughout 2022 and into early 23. But yeah, I do want to reiterate for everybody, our long-term projections have not moved. We continue to target 150 million of annual run rate revenue, 50 million of run rate adjusted EBITDA. COVID, you mentioned that. We talked about a bit about that last time too. It's altered some of our plans in the short term, but we still remain confident in our long-term numbers, and those goalposts have not changed for us. 2021 overall, I'd say, is going to be an investment year for us. We're going to continue to build those capabilities across all 3 of our verticals. But again, from a long-term perspective, our goals remain unchanged.
Mm-hmm. Yeah, that's great. And obviously something that we talked about in the last episode, which is that a lot of companies right now are taking advantage of this sort of downtime, if you will, to really start building and planning out, thinking about the future and really executing on those plans. And it sounds like you're sort of doing the same. And this year also sort of investment year, like you mentioned, and the fact that the goalpost hasn't moved is really, I'm sure it's reassuring for investors out there. I do want to kind of, because NFT is all the rage, before we move on to the balance sheet question and the sort of financing question, the capital flow, cash flow questions, I do want to touch on NFTs for a second.
Sure.
NFT, obviously all the rage. You recently signed with Dolphin Entertainment. So I just want to give investors an opportunity to learn more about that and how you're thinking about that. In terms of how should investors size up this opportunity? When should that come online? You mentioned towards the end of this year. Just a little bit more color on that, because it is such a rage and people are interested in this space.
Yeah, no, absolutely, Becca. And we're really excited to be entering the NFT space, especially with a partner like Dolphin. We see them as emerging thought leader within this space, and really excited to work with them on NFTs. This is an area our fans, our consumers are really enthusiastic about. We felt like we really needed to look at it and enter the space to make sure we're interacting with those consumers in terms of how they enjoy the sport, where and when they want to enjoy the content. So it made a lot of sense for us to really look at this space in detail. So with the content we talked about, the access to brand partnerships that we have, we're going to really look to bring a lot of stories to life in ways that we as a company only can. We recently just announced those first 3 pieces we'll be working on. That's through our partnership with Elite Holdings and H2H, or Heisman to Hall of Fame. Those first 3 are going to be Tim Brown, Earl Campbell, and Doak Walker. So really, really, excited about that, and doing right by those legends and their stories and their careers. In terms of sizing it, still a little early at this point. We're not at the point of providing guidance for what the NFTs are going to produce for us this year. But I do expect we'll be able to talk more about that as we learn more about it here over the relatively short term. Again, in terms of timing it, it's not a long cycle to get something out there on the market. So that's something we're going to look to obviously push and be able to bring to market here over the relative short term. So it shouldn't be too long before we have those pieces out there on the marketplace and ready to sell.
Awesome. Awesome. That sounds great. Yeah, I mean, obviously the NFT all the rage, and it's interesting that you mentioned sort of the brand. It sort of ties nicely to what we talked about earlier on, which is your basically your sort of competitive advantage, which is the brand. Really riding
Right.
on that and leveraging that as much as possible, even in the digital space, NFT space. Um, that's great. That's great that you sort of explained that for investors. Thank you. Now,
Sure. Yeah.
let's move on to the balance sheet question.
Yeah.
So as I look at your balance sheet, as I look at the growth potential, and obviously with growth requires a lot of investments, and you have indeed took on quite a bit of investment on the equity side and the debt side. So I just wanted to point this out and ask this question for on behalf of other investors, which is the
Mhm.
principal payments that are coming due this year, not this year, next year and the year after, or I guess this year and next year, 2021 and
Yep.
2022. Bulk,
Mhm.
majority of the principal payment is due this year and next year, 54 million and
Mhm.
21 million next year. And so
Mhm.
I want to give you the opportunity to respond.
Yeah.
How are you going to deliver on the applications, and what that capital mix is going to look like? Yeah.
Sure. Yeah, no, absolutely, and thanks for bringing it up. Yeah, I'd say from a balance sheet perspective, we've done a lot of work on the balance sheet since day one that I've been at the company. It's been a focus area for me. We've been able to take our debt balance from what was about 165 million at the end of 2019 down to about 99 million at the end of 2020. And I say, our work's never really done on that space. I always talk about our balance sheet as being very dynamic. Yeah, even through the work that we did in 2020, some of that included conversion of debt to equity and really working with debt holders to make sure we've got the optimized capital structure and the most conducive balance sheet to what we need to do looking into the future. What I'd also say is, including our merger, we've raised over $100 million in new equity, which puts us in really, really good position now to focus on the construction loan for phase two assets. We still expect to have that completed here in the second quarter. And I'd say once we get to completion on that construction loan, Becca, the balance sheet again is going to shift a lot. Things will look a lot different in terms of what we're looking at from a debt perspective, as well as an equity perspective. So again, something that's at the forefront of our minds is we manage on a day to day basis, and I think again the key takeaway is we had always targeted raising about $100 million in equity. We've now done that, so now we pivot very much to making sure the debt structure is optimized and we have the right financing in place to make sure we're progressing on our phase two assets.
Mhm. Makes sense. Makes sense. So I guess this ties nicely to the next question I'm about to ask, which is related to the cash flow. Um,
Sure.
and let me just go ahead and sort of give a little bit of detail. So for our audience, so obviously as a startup, your cash flow primarily comes from financing, because you're
Mhm.
starting out. You don't really have a lot of operations to really meet the demands, internal demands for operations. So it's primarily financing. Having said that, as you
Mhm.
mentioned, $100 million for equity. Um, that sort of was a big cash infusion. But from an equity holder investor standpoint, it is a little scary. It is a little bit scary and risky to invest in a company with a lot of share dilutions. That's sort of as part of the growth trajectory. So walk us through what you think and how you think about share counts
Mhm.
from that standpoint. And you mentioned the construction loans and the equity. So kind of tie those two together
Yeah.
and walk us through the balance sheet and the cash flow.
Yeah, no, no, absolutely. So, yeah, again, we've raised a significant amount of capital through the merger, the subsequent equity offerings that we've done, and we feel like that puts us in a good position, both from working capital and now really letting us focus on finalizing our construction loan for the phase two assets. In addition to that, we've also talked a bit about public financing as part of our phase two capital stack, which comes in again more on the debt side. And in terms of dilution, you know, I'd say again, our primary focus right now is on the construction loan, getting that finalized for phase two. We plan to utilize the vehicles we've talked about in terms of those private and public, financing sides on debt. I mean, you never say never in this world, but I'd say debt and filling out that side of the capital stack is our primary focus at this point.
Hmm. Yeah, that makes a lot of sense. Just to recap on that, so fully diluted, 110 million shares. Do I have that correct? And then
Yeah, that sounds about right.
yeah,
Yep.
fully diluted, 100 million, 110 million shares. At least for the time being, stable, but never say never. I mean, it could change in the future depending on the market dynamics. And they're really focusing on the
Mhm.
debt side of things, pivoting to construction loans and the debt side of things. Um, and taking care of obviously paying out the principals and maybe like punting that down the road. That's sort of TBD still, but really the point here that I think you're sort of driving home here is that really pivoting to the loans, the construction loan side of things, away from the equity.
Yep, that's right. Yeah, your primary focus being on finalizing the construction loan, which we're still targeting here in second quarter, as well as some of the public financing on the debt side as well.
I see. Oh, this was great. Awesome. So we walked through, just to recap real quick. We talked about different strategies, the three different strategies, verticals, and then three-phase approach of the company. We talked about competitive advantage, brand being sort of the key crux, the weapon of choice for the company, and then we talked about different financial statements, income statements, starting from the top line. Um, you know, phase two really kicking in this year, but also as an investment year, looking into the future, and then the balance sheet question about the principal payment due, and then the cash flow with the dilution, and really pivoting and really focusing on the construction loan side of things. So I think that sort of summarizes our episode here. Is there anything that you wanted to mention to the audience, to investors, to your colleagues, your family and friends? Open it up for
Yeah.
open the stage up for you.
Yeah, well, obviously, first and foremost, to family and friends, thank you for all the continued support. We really really appreciate it. My teammates at the Hall of Fame Resort and Entertainment Company. There's no other team I'd rather be working with on this, and they bring their A game every day. So we greatly appreciate that as well. Becco, thank you again to you for having me on here. It's always great and a lot of fun to be able to tell more folks about the story of the Hall of Fame Resort and Entertainment Company. And for further information, whether it be on the overall company, Hall of Fame Resort and Entertainment Company, again, we're traded on the Nasdaq under HOFV, or a destination in Ohio in Canton, which is the Hall of Fame Village powered by Johnson Controls. I'd point folks to our corporate website at hofreco.com. We talked a bit about the Hall of Fantasy League. The site or the website for that league is thehofl.com. Hopefully investors and folks check us out and look for more information. And again, Becco, thank you so much for having me on. I really enjoyed it.
No, it was my pleasure. Thanks for coming on, Jason, and thanks for all that information. We'll definitely put that in the show notes as well, so that people can access it. All right,
Perfect.
Jason. Thank you again, and thank you everyone for listening. And I'll see you guys in the next episode.